That was part of the whole, right?
I mean, hypothetically, yes.
No, I'm not talking hypothetical. Well, let's go back to a check on the market, since people might not understand that one. It's easier to hail it on the app sometimes. But maybe the cab drivers are feeling better now with the threat of Uber and Lyft. Lower as we head to the half, and the half starts now. Thanks for being with me, Frank.
Thank you, John.
With Brian Sullivan.
Oh, left me hanging.
And welcome to the Halftime Report, everybody. We're never going to leave you hanging. I'm Brian Sullivan, in for Scott Wapner, and tech getting hung out to dry, getting wrecked again, building on last week's big losses. Technology, if you're not paying attention, is on pace for its worst year since 2008. Nearly 90% of technology stocks, they're down on the year. Question is, how much more downside or maybe upside is there left? We're going to debate that and more with our investment committee today. That is Shannon, Saccocia, Surat Sethi, Joe Terranova, and Jim Lebenthal. Before we get to our outstanding group of traders today, we're going to show you a lot of red on the screen to get to these markets at this hour. Stocks adding to last week's big losses. The NASDAQ continues to be the big drag. The NASDAQ's down 1.3%. The Dow is down 80, but holding up relatively much better than technology. Just down 0.25%. The 10-year yield at 3.59%. There you go. NASDAQ down, small caps down exactly 1%. Everybody, hope to see you on set here in just a couple of days. You could probably figure out what's going on there. But, Jim, let's start off with you and these macro markets. Technology, I mean, just can't get out of its own way. How much of this is fundamental fear about next year versus maybe, hey, let's do a little tax loss selling ahead of the new year and cut down on that giant check many of our viewers write to Uncle Sam every 12 months?
Well, it could be a little bit of all of the above. First off, I'm not going to try to give you a fist bump. I'm not going to try to give technology stocks a fist bump either. I've been underweight tech for most of the year. I think there's something to be said looking at the Dow versus, say, the NASDAQ, that this is a market where leadership is transitioning and has been all year from growth to value. I think that's likely to continue. Now, this does not mean that you should not own any tech whatsoever. It does mean, however, that you should be selective. I tend to hew more towards the value-oriented side of technology. So things like the semis, things like Cisco Systems, and where I get into a higher multiple, it's really only the FANG names, Apple, Microsoft, Google, those sorts of things. Because here's the two things you got to realize. One, there's still a valuation difference, technology versus other value stocks. And look, at the end of the day, they're all stocks. You should pay a certain amount for growth. It doesn't matter whether it's coming from Apple or whether it's coming from Caterpillar. The other thing is when you look forward over the next couple of years, there's going to be decent returns from technology. Again, don't sell it all, but you're likely to get better returns from the cyclical sectors because that's where the earnings growth is going to be on the back of supply chain onshoring and infrastructure spending. So this is just all about leadership transition. It's been going on all year, Brian.
Yeah, it has been going on, Shannon. And I think there's been, and who can blame our viewers or listeners for kind of waiting for the tech turnaround? Well, technology always wins, so eventually it's going to turn around. You've been saying that now, not you, but the viewers have been saying that with their investment, Shannon, for about 11 months now. Do you see any fundamental shift coming?
Not right away. It's really hard to think about it in terms of, are we looking out a year, 2 years, 3 years? Are we looking over the course of the next couple of quarters? Because I don't think that we're going to see, particularly in sentiment, a shift towards technology over the next couple of quarters. We are going to be in an environment where, we're going to have some continued concerns about the Fed in terms of how many additional rate hikes that they're going to put into place in the first quarter. These stocks, despite the significant declines that they've experienced this year, and we've all seen it, particularly the super high valuation, low profitability or no profitability ones, they have experienced significant declines, but the valuations are still relative to the S&P 500 expensive, high. The multiples are going to continue to come down. They're going to be pressured. I think the thing to think about is that anchoring yourself to 2018 or 2019 in terms of, the overall landscape is going to be incredibly challenging. Now, there could be some catalysts for technology in the second half of next year, namely this recession that obviously we're all concerned about. That's what the markets are trading on right now. And if you start to see significant economic contraction and the Fed has to adjust their rate hike policy and perhaps even become more accommodative, that could give a bit of a boost to technology stocks. The other thing to think about, Brian, and it's really important, is the dollar. If we do see a weaker dollar next year, that certainly is going to help tech on the bottom line. But I think we're several quarters out from that, and I think for the time being, we're going to continue to struggle with, again, the fact that these stocks are just more expensive.